Welcome to another exciting edition of the Trading Bell. This week on the program, we'll be speaking to Flora Mutahi, the chairperson of the Kenya Private Sector Alliance, and what way to best start of the year with a look at what the private sector has in store and what was 2021 like and what do we expect in 2022. Thank you, Madam Flora Mutahi, for joining us on the show. It's been a new year. A lot has happened. Perhaps let's just begin by what's your message to the private sector as we start off the year, looking radiant and always ready for the job.
Well, thank you very much, Abby. Good to see you again, as usual. And I think my first message would be Happy New Year. You know, this is 2022.
Yeah.
We are coming off the back end of quite a raveling pandemic that has hurt the economy and the health of our people, not to mention the loss of lives, who we apologize. But basically, 2021 was a year where we saw quite a bit of recovery. We saw a lot of the sectors begin to recover. If we look at agriculture, it looks like a lot of people went back into farming. Of course, the flights were able to take off, so the larger exporters were also able to pick up. Like, you know, something that like tea, which is dear to me, grew within that same period.
Yeah.
We had the construction industry also improving. We had, of course, the ICT industry, you know, due to the laying of the cables, people working from home. Of course, we've gone digital. That was an area that expanded. Manufacturing also expanded during 2021, of course, compared to the low base of 2020. But basically, there are some sectors that we saw still struggling to wake up. And of course, this is due to the measures that we had put, you know, the lockdown. So the hospitality industry was still trying to come back. We also had, I think transport is, it did improve, but definitely was still affected. You know, we only lifted the social distancing in that about mid-year or towards the end of the year, so that also did not do too well. So there are some industry. Sports also did not do very well. But again, as I mentioned, sports, I feel very warmly about the fact that we were able to bring back the Safari Rally, you know, an event that even our president graced and committed to the next several years. And I do know there were other sports like the Youth 20 Under 20, where with the guidance of CS Amina, she did actually purchase rooms within the private sector, hotels, just to help them recover and also, I mean, accommodate the youth.
Sure.
But these are measures that that we all took to be able to sort of help the economy recover. We did also a research within our membership where we sort of asked what was 2021 like. I think this was September of last year. And about 7% had already said they recovered what they had lost in 2020, actually by October of last year. I think another 14% were expecting to finish, to recover fully by end of 2020. About 43% were the ones saying that 2022 is where they expect full recovery. Although unfortunately there was a 16% who said they are really not sure that they are going to recover. So those are really, you know, the heartbeat of what the private sector saw. And you do know, of course, as an economy as a sector is recovering, of course, the subsectors that support that, you know, the transport, the security, also begin to get up. So that was a question about 2021 and how that went.
Okay.
Yeah.
I can't wait to hear from you what 2022 holds, but just to pick up from your numbers, very interesting statistics that you shared with us and just giving us a top line overview of just how some sectors recovered. From where you sit, are we out of the woods?
Definitely not out of the woods because, you know, remember we almost came to a grinding halt and a standstill. This is because, one, we belong to a global economy, and that has also been very challenged. Supply chain has really been challenged. So you're tending to find, I do know the manufacturers are really fighting for, I mean, people importing are fighting even just for containers. You know, transport has not gone back. The travel bans are still affecting people. Transport across borders. You know, so definitely we are not out of the woods. And this has actually gone, and we saw this in 2021, where we saw cost of doing business, especially importing, was really stretched. And costs are going to go up, unfortunately. I remember there was a statistic I saw from I think it was the IMF, where they were saying output loss during this whole pandemic was expected to be about 11 trillion, which was supposed to double until 2025. So you can see it's going to continue to grow, because this supply chain challenge especially is now if I'm importing a product for my factory, it's taking me longer. I have to pay more in terms of logistics. Therefore, that cost is going to be passed on to the consumer. So definitely, we are not out of the woods. And it is important for us to then look at internally, we need to continue to drive competitiveness. We need to continue to drive predictability of business. And most importantly would be sourcing locally, you know, because then that all of a sudden, if I start I used to import my products, and all of a sudden I start sourcing locally, I would be able to maintain my prices and actually, you know, support the consumer.
Interesting. And many business leaders are saying the worst is behind us. But what does 2022 portend for you? We are going into an election cycle. We have the new variant, Omicron Delta. And we still have the budget coming up. And what do you see in this new fiscal year? What does it hold for the business community, for investors? I know Kenyans are quite resilient. We've been able to rise above the political noise over a couple of years. And I know KEPSA has also been very focused on the Kenya Daima campaign. Okay.
Maybe, Abib, you allow me, before we jump into 22, to sort of tell you the kind of things we did as KEPSA in 2021 to just ensure, you know, the recovery of business.
Yeah.
So one of our projects that we did is we continue to support government on you know, pandemic recovery. So we had all private sector leaders meeting, bringing out their issues, where we deliberate, and that way we share this information with government. I mean, we must have seen during 2020 we did a lot of that, and we continue to do that within 2021, including having a help desk, a helpline, so that even that dealt with even social issues. So women who wanted to deliver were going into maternity during the delivery were able to be assisted.
Yeah.
So private sector continued to remain close with government and really try to help the businesses sort of succeed. The other thing, through the MasterCard Foundation, we had a pandemic recovery program. This was mainly aimed for the MSMEs, where they were being lent money from the tune of 100,000 to 1.5, where we lent 42 million shillings to these businesses to help them sort of come out of the you know, the woods.
Yeah.
I think in total we helped 106 different companies. We also had a mentorship program where we got various business leaders mentor businesses within this period. So they would get on a call, and we're proud to share figures of about 10,000 people were mentored. So, and you're able to raise your issues and say, this is the challenge I'm facing and this is what I'm doing. Of course, we had the Ajira, which is a digital program that came to light, where we helped them sort of make money within the digital economy.
Yeah.
And here we helped 40,000 businesses actually improve, and I think we created something like 2.1 million jobs, I think between 2020 and 21. We also had a program, an e-booster program, where we helped them also come onto various platforms. I think we did something like almost 3,000 businesses, and about 1,600 we put them on various platforms to continue to trade. So you could see definitely KEPSA has been very much at the forefront to really try and help the economy improve.
Yeah.
This also, through the Healthcare Federation, we were also working very closely with government to drive the vaccination, because if we do not get ourselves to herd immunity, we will not be able to continue to open up the economy. So we actually did do two things. One, we helped them a lot on logistics and you know, helped them campaigns and do the delivery of vaccinations. And there was also some private sector who actually managed to put some funds together to help government actually procure vaccines. So, you know, with all this and a myriad of other programs, we've definitely seen the economy sort of bounce back.
Sure.
And I do believe, the figures are not out, but if you looked at Q2 figures, GDP growth was again between our normal, well, we're heading towards normal. We had started to get to 5-6, actually almost 7, but I think we are going to see something between 4, 5, and 6.
Okay.
6 at the most. So I do feel we are heading in the right direction, and 2022, coming to your point,
sure,
should not really be much of a difference. I think we're predicting 5.6 or 5.9 GDP growth. Inflation should be maintained between 2.5 and 7%, which is really the recommended. Since this is crystal ball gazing.
Yeah. On the other hand,
there are a few things that really we need to remain constant. You know, for example, as much as we're saying that about GDP, if we really interrogate the components that drive GDP, one of them is government expenditure. Now that continues to grow, and you know, that will continue to drive the GDP. The other one is imports and exports. Exports have increased, so we do hope that is going to continue. Imports have decreased, of course, with the challenges that we are seeing, the dollar going up. So a lot of people have opted not to import or are finding it difficult to import. But there are two aspects there that are going to remain challenged, which is going to be public expenditure. Of course, because the way the economy is, of course, we are not as liquid as we were. So consumption, public consumption has definitely gone down.
Sure.
And that is really going to affect
disposable incomes.
Yes, disposable income. You've seen it, and the Kenyans are crying. I think there's even an article in the newspaper talking about. I mean, the headline today is talking about it. Vitu kwa ground. As much as the statistics are showing this growth, the vitu kwa ground are not. It's not translating. It's not translating to the jobs increase that we are looking for, and it's also not translating to the poverty reduction. And you know, poverty reduction, I think globally was supposed to be something like 3.5 million jobs were lost during this period, and we do need to work very hard to whatever. The other aspect that is going to really challenge this GDP growth is public investment, private sector investment, sorry. During an election year, like you know, we don't necessarily invest. There's a very wait and see approach towards investment. But having said that, as private sector, over the years, we have worked again very closely with government to really try and delineate politics and economics. In 2011, we began a campaign at KEPSA called Mukenya Daima. And under the Mukenya Daima, it's a peace campaign. It's a campaign where we really look at what is it that really makes our GDP dip. And if you look at figures from, you know, historical figures, I think in 97, our GDP did dip from 5.2, it went to 2.3. I think in 2008, I think was our lowest, of course, because of post-election violence. But from the time we began the Mukenya Daima, which was 2011, in 2013, the GDP growth only dipped 2 percentage points, I think from 4.8 to 4.6. Now, what we do with this peace campaign is we get together with everybody in private sector, you know, and we get together with the churches, opinion leaders, socialites, and we preach peace. And we say, this is our country. There's absolutely nowhere we are going. So why don't we have an election and have peace? So one of the things we really did promote in through the period is with leadership comes responsibility. So please be responsible for your utterances, be responsible for what you're causing, and just be responsible. And the other thing we also asked them is to really trust the courts. I know in 2016, we actually managed to get the judiciary, the executive, and the legislature out in Mombasa, where we really looked at this delineation of politics and economics. And the security forces then told us what they were doing to make sure that they've mapped out the hotspots, you know, to make sure that we're going to be able to proceed. The president himself in this meeting that we had actually signed a peace accord to say that he personally is going to ensure peace within his jurisdiction. And we got, I think we got over 1 million signatures on that peace accord. And it's something we're going to also try and do this year, so that we continue to delineate, politics and economics.
Yeah.
We've succeeded. We saw it succeed in 13. We saw it succeed in 17. And we are hoping even this time around, we are going to ensure we drive peace. I think you remember the campaign that said, Kagua kabla kuchagua. Know who you're voting for. Do not sleep and hope that, and come back and say, hey, by the way, Flora is not great, Abby is not great. Where were you? Did you choose your leaders, or were your leaders chosen?
Sure.
And of course, right now, one of the campaigns we've already begun is jiandikishe. We are telling the youth, please come out and jiandikishe, get a voter's card, so that you can take responsibility. This is your country, this is your nation. So we do work very hard on this Mkenya Daima. We have several partnerships with various organizations, and we will be coming also to the media, to the public, to ask you to partner, because this is our country and it is important for us. As much as we are private sector and we are, drivers of the economy, we understand that it cannot happen if we continue to link it too closely with politics.
All right. And as we close, as chair of KEPSA and as an entrepreneur in Kenya, the business environment has been quite shaky, in the sense that the cost of doing business is still a big impediment for SMEs to break through the ceiling, to actually rise up to their potential. There's also the concern of power costs for manufacturers. There's the issue around the red tape when it comes to the business sector reforms. From where you sit, what are some of the key initiatives that you hope to drive towards this, to ensure that we have a very conducive business environment and we're able to grow, as you mentioned, the GDP from where it is to another number? Perhaps just walk us into what plans KEPSA has and what is the situation right now from what you're hearing when you go to the ground?
Of course, like we said, when we go to the ground right now, everybody's crying, because liquidity is just not there. Purchasing power is not there. So for us in KEPSA, what we aim to do through our various BMOs, which are our membership organizations and the government, is to continue to advocate for a competitive business environment. If we continue to raise our taxes and strain the economy of taxes, then how much money are we then leaving for the economy to turn around? One of the other things we are doing is we are trying to push, cost of compliance. You saw us simplifying things like registering how you do your business, so that it's easier for you to start off a business, easier for you to do your accounting, easier for you to actually run your business. Coaching, mentoring, training, this whole digital space areas, of course, that we continue to ensure that we are A, giving the capacity, B, we are in constant communication with government. You're coming to tax the ICT sector, all this trading on online, whereas everybody's moving that way. Perhaps we need to let it develop a critical mass so that we are able to drive better numbers. So those are some of the access to markets. The government, KEPSA, through working with government, have been able to really work with a lot of bilateral agreements with several countries, because we want to move Kenya towards an export-led, country. So there are a lot of bilaterals. For example, Tanzania, they had 64 NTBs in 2020, of which most of them were dealt with in 2021. So really sitting down and critically looking at what are the real tariff and non-tariff barriers that are influencing trade. I know the government, you saw us in South Africa, really sitting down with the government and the people there, the private sector there, and saying, let's take line by line. Why exactly are we not able? Why is the balance of trade between the two countries so bad? And I think last year alone, we managed about 45 inbound and outbound trade missions, to actually look at improving trade between various countries in this country. We managed even to sign agreements, support agreements. I think one big one was the one we did in the Americas, where they're coming to capacity build, help us in financing. Financing is a big area that really affects growth of businesses and SMEs. You know, help us with knowledge sharing so that we move Kenya towards being an export-led economy, because we cannot keep looking within our borders. You know very well we've been pushing for the Africa Continental Free Trade Agreement, because it's time we start looking at Africa trading with Africa. If you look at inter-Africa trade, it is said to be somewhere between 15 and 18%, whereas inter-European I think European trade is something about 45, whereas I think the Asians is 45, sorry, and the Europeans is about 65. So I think it is important, and everybody's looking at Africa. So why is Africa not looking at itself? And I do know we've moved quite a lot. We're starting to form a lot of Pan-African organizations, trade agreements, sitting down and really looking at how can we take goods from East Africa to West Africa, as opposed to going through all the other continents that you know we go through.
All right.
Yeah.
And in closing, what's the one thing you'd like to see KEPSA, especially in this year, execute to its full conclusion? Because I know KEPSA is running a host of projects, a host of initiatives. But being an entrepreneur, what also would be your closing thoughts on that business person who says, I didn't get access to the booster program, I did not get access to the bailout funds, and they have been wiped out completely. They are no longer in biashara.
It's completely, it's unfortunate. It's very, very unfortunate. But what I would like to say as an entrepreneur, every challenge comes with a silver lining. Where is your silver lining? So perhaps maybe if your capital has been wiped out, maybe it's time you start looking at the service industry. Incidentally, the service industry is growing way faster than the manufacturing industry. And I'm sure things like access to capital and access to markets is one big area.
Yeah.
So what are you competent at? What competencies can you develop? And there are programs like we are doing. We're not the only ones offering these programs. Banks are offering these programs. BMOs are offering these programs. Find them, look for them, and try to grow yourself. But to your question about what do we want to do single-handedly at KEPSA, we don't have a single-handed message.
Yeah.
But I think this ensuring we have a peaceful and fair election for us, so that we are able to continue to drive our business, is top of our mind this year. Definitely, we're hoping for a peaceful transition. I'm sure we're going to get it, but it's not going to be done with, you know, it needs a lot of hard work. The second area that I believe that we need to continue fighting for our entrepreneurs and our businesses is competitiveness. You know, we really need to continue to challenge our cost of doing business. Why do I pay licenses for one county and I have to go and pay licenses in another county? So to continue, there are a lot of bills, there are a lot of you know, conversations that KEPSA has been able to drive, you know, that has seen the light of day, and we continue to drive. If there's one word I would want to leave here is we continue to drive down the cost of doing business in this country, because the cheaper it becomes, you know, the better it is for the constituents, and the easier it is for me to begin to export and make Kenya an export-led economy.
All right, amazing messages, and of course we will be monitoring just to see how things pan out in this year. Thank you so much, Flora Mutahi.
Okay. Thank you very much, Abby.
All right, we've been speaking there to the chairperson of KEPSA. Quite optimistic that we're going to have a very bullish year as a country and of course as an economy. Over and above that, the cost of compliance, cost of doing business remains top on their radar when it comes to normalizing the business sentiment in the country. Well, that has been the Trading Bell for this week. On behalf of the entire team, we say bye-bye for now. Keep safe and keep it locked on KT News.